Everybody, Jerry here. I want to go over risk management, how I set my key levels. I attached in this video about an hour and 30-minute video of how I go over this with the community that I trade with. There is over 2,000 people in it, a part of this wonderful community that we have for day trading, everything from options, currency, futures, etc. So this is about an hour and a half long. It's got rules, it's got entries, it's got exits, it's got sizing down to protect profits, etc. So if you're interested in how this looks and how this is, please click the link below and you can sign up to trade with us. Also, if you like these videos and you're finding them helpful, please like, subscribe, etc. It really helps me with making more of these in the future. So anyways, I would highly recommend that you watch it in 1 to 1.5 speed and maybe 1 3/4 speed. It is quite lengthy. It's over an hour and a half long. However, it is filled with very, very valuable, incredible information of how to day trade and scale your account, protect profits, and not give money back to the market. Thanks, guys. See you in a little bit. Good morning, everybody. Matthew, good morning, my man. Can I do a quick just sound check and audio check from whoever might be on right now? And then I'm going to get started on putting the levels in from yesterday to the pre-market to the aftermarket. And then I'm going to break down the hybrid strategy a little bit. And then we will wait for our news candle and see what's going on here. We have a huge, huge sell-off happening, as we can see, but no surprise the way SPY's been behaving over the last few weeks. Sal, good morning, my man. Sounds good. Laura, good. Justin, good to go. Awesome, guys. Appreciate it. Good morning, everybody. All right, team. A lot of you guys know how to do this. A lot of people are new, and everyone who is new, welcome to Greystone. So I am going to just set our levels from yesterday and how I do that with the PDL lows, the PDL touches, etc., the aftermarket high, which is Asia market, as you guys know, and then the London market, which is also the European market. So PDL wick, various lowest point of the day. And then I mark the PDL touches, and then I mark the highest part of the most amount of touches that I can grab um, close to that PDL wick. So in this scenario here, you have this wick, you have all three of those and 4 touches. And then if we move it up, we'll get this out of the way really quickly. Sorry. We'll get this out of the way really quickly, and we can mark this red wick here, right? So now we have 1, 2, 3, 4, and 5 touches at 725.41 down to 724.41. So a massive difference there, literally a $1 difference in the touches to the wick. So there's a huge liquidity gap in that region, which is why I mark those two. Sometimes they're really close and it's not as relevant. Going to previous day close and get that out of the way real quick. Scroll this back down and grab my line. So now we'll mark previous day open, and that's where this candle opened at the 9:35 candle. Move that out of the way. Then we'll grab pre-markets, get those lines close to where they belong. And we'll go aftermarket high. And that is the highest spot that happened in the Asia market or Tokyo market, however you guys want to label that, doesn't matter. One and the same. And then aftermarket low, exactly the same way. And then we'll mark our previous day high touch. Or wick, I'm sorry, I grabbed the wrong one. And then previous day high touches, as you guys can see, same exact scenario, which coincidentally, or not a coincidence, is in line with the aftermarket high. Previous day close is our next one. We'll grab that. That's the bottom of this red candle. 734.64. And we'll take our previous pre-market low. It's where it opened up at right here, I believe. Maybe it gets lower in there. It actually does. A little bit lower here at this wick and rejects it. And then we will go to our pre-market high. All right, team, that is everything of how I mark levels from the yesterday's levels to our current levels. And then current price action tells the rest. I do not leave the support and resistance from where I had them. I mark those in real time, as you guys know. So any questions on that, let me know. It's pretty simple. However, if you are new, I can see how that would not make sense yet. Andy does it a little different than I do. And I think Ryan does it a little bit differently as well. Steve, it is all points found on the 5 minute candle. I use the 5 minute candle for it. However, the 1 minute on a daily chart would all tell you the same story. But I just use the 5 minute because that's what we trade off of. But Nick, confused on the previous day open. Did I mark it wrong in real time? Yeah, I did. I moved it by accident. Previous day open was here at 728.78. Previous day close. This red one right here is where it closed at. And here we are in this huge sell off here. So I'm going to just leave my support and resistance out of it. And then we're going to talk about the 2 p.m. session yesterday. And if you guys want to go back and watch that, there's a really good hybrid explanation of how it breaks down. So the top of the range, and I'm going to mark all this in white just for explanation purposes for us. So the top of the range, right? This is how I establish the hybrid. All right. So now you have 736.55, top of your range. And this is coming in the 2 p.m. session, right? So here's our 2 o'clock candle. This is when we start trading in the afternoon. So mark the top of the range, right? And the bottom range. That could be your overarching and underline. And now you would tighten this up as price action is telling you. So this would become here. And this comes down to here, right? And then inside of this, you start establishing your lower level of support and resistance, right? So now we would have the bottom of this little doji, and there's your lower level of support or your upper level of support and your lower level of resistance, right? And then you can watch and price in real time how it will respect these levels. So you get your firm close here, it comes down, it draws, you're really, really close here. However, you have lots of liquidity sitting down. You could get a half off break even trade. Then you have this trade now where this was clearly support. It breaks through it. This support now becomes resistance. Hybrid trade all day long. We took this candle. We got a full trade. We took a re-entry here. We got stopped out. We took a re-entry here and got another full trade all the way up into it. And then the session was over at that point. So you could have took another entry here above the outbreak range, got a huge full trade and distribution all the way up. That making sense, everybody? No, Nick, man, I'm sorry, man. I'm human just like us. Make mistakes, buddy. Okay, team. So in a nutshell, that's the hybrid level. And as you can see, the way Andy and Ryan would leave lines on their chart, these are all into play right now under real time. I'm going to nuke these lines because we are going to use real time price to adjust them. But there's nothing wrong with the way they do it versus the way I do it. It's just a matter of preference. So we'll snatch down underlying support now, way down here, just to get it out of the way. We'll put support right here just to get it out of the way. Overarching we'll put here, and resistance we'll put here for now. Those are not marked on anything yet, team. All right, team, we have approximately 10 minutes till trading window opens, and then we have a news candle. I'm going to show you guys a basic set of my rules that I have and I follow now. I've modified these a little bit for you all. This is not exactly what I do, but this is what I've done in the beginning, and I have modified this. And I'm going to show you guys this on a screen here so you guys can decide if y'all want to use this or not, or at least screenshot it and modify it to fit the way your personality is and the way you trade. So 1 day chart. So weekly target, 6% protect weekly target, if not near your target by Wednesday, sacrifice a target, protect your capital. So what that means in my mind is I'm trying to get to 6% account growth. By Wednesday morning, after that session's over, if I am not at 6%, I am automatically sizing down to protect the money that I have made. I'm not going to go from a 4% down to 1% and give that away. So now my weekly target is no longer obtainable without some magic stragglers happening. And I literally just start protecting where I'm at. I have a weekly max loss of 8%. Now, when you're sized very aggressively, it's very easy to get to that. So you have to walk that line and be very cautious of that. I don't trade out for two stop outs per session. I don't trade from 11:30 to 1 under any circumstances, no lunch trades. I never trade during news, although a lot of times when we're trading, it feels like news because of announcement candles and Iran war, etc. So there is that exception to it. There's nothing you can do about it. If I get a full trade, I always size down in that session unless I've had a stop out before it, right? So stop out one and then full trade. Now I'm neutral in the day or should be close to it. So everything stays the same. If my first trade is full, then my next trade goes down to half or a third to protect those wins. I always maximize stragglers to protect old liquidity, and my mindset will always shift to intraday trading, guys. You go from the scalping trade to a long-term trade, right? So if you get into stragglers, you now start trying to protect aftermarket high, aftermarket low, pre-market highs, pre-market lows to allow those to maximize your money and stay in those as long as possible. Those old levels will become liquidity sweeps. Know your plan. This is huge. Know your plan and how you will be sized before the session starts. If you do not have a game plan and a mission statement of what you are going to do before the session starts, you're going to lose your ass over time. All right. So when you're in a trade, keep it clear and focused. No distractions. If you've got kids screaming in the background, you've got wife, you got husband, whatever it is, try to lock yourself into a room and be very, very undistracted for 1 hour of the time you're on the charts. It'll be a game changer for how you perform in this long term. And this also, no matter how A plus the setup is, this is always, always, always a game of probability, not certainty. So no matter how good your levels are and how great it looks, the idea of it is to have the high win rate in your trades to have a plus 70% win follow through over time. There's no way you're going to be right 100% of the time. It's impossible. So get that out of your mind. If you are that person who needs perfection, it's impossible. This is probably you're going to have to switch that mindset to make it work long term. If you guys want to take a screenshot of that real quick, you're more than welcome to, or you can come back and review the video. So I'll leave it there for a few seconds and then we'll get back to price action. All right. Let's focus on price, set some levels, and get ready for the session. All right, guys, support's very clear, is it not? Goes right to the bottom of those two bodies. One could argue it could come up a little bit higher, and we might do that over a course of a few candles. Going to go ahead and nab underline at the bottom of the red wick. And resistance, I'm going to set at the top of these wicks as of right now. And the reason why I'm going for a higher resistance is because we are in bearish structure. Overarching will be the pre-market low or this red wick at the opening candle as of now. Kirsten, when was the last time you had an 8% weekly loss? Last time I had an 8% weekly loss was October of 2024. I've had 5 red weeks total last year, and I have, knock on wood, fortunately have not had a red week this year. Now, that being said, Kirsten, I've had some very, very small weeks. I've had some weeks that were $100, $180, $200 green, but they were not red. Steve Gold, thanks, man. I appreciate it, man. I'm glad that's helpful for you guys. And I can send. Take a screenshot of that now in a few moments after we get through this candle. I want to watch this candle here and how it responds to the news. It might validate this resistance line that I have, which is completely fine if it does. And we'll just establish that and wait for the setup to come. Ren, you're welcome, man. Fraser, you're welcome, my man. No problem. And team, that's how I've modified mine. Mine's still a little bit different than what I'm showing you guys. That's the aggressive side I'm using now. If you are not profitable yet, change that down to 2% with say a 4 to 4.5% weekly loss. And if you've had 3 to 4 or 5 stop outs in a row and you're only copy trading, chances are you haven't copied all the sessions, which is a little bit of an abnormal, right? Now, also that being said, if you're taking your own trades and you've had 5 to 6 stop outs in a row, take a break and just watch price action and mock trade those and journal those mock trades, etc. Jonathan, where you been hiding at, man? Welcome back, buddy. Text you'd kill for a $200+ week. Let's get it happening, man. Text, we can make that happen with one straggler, brother. Welcome back, buddy. Todd, you're welcome, my man. Danny, what is my opinion about patience in this game? All right, Danny, that's a fantastic question, man. Was I still lack patience in my personal life. And my trading, I've got it dialed in very good, but I'm still not great at it. And I find myself wanting to force trades when I find myself impatient. If you can master or 95% master patience in trading, your portfolio will reflect huge over the months and the years. Patience is what pays you, not the setup, not the execution, all that stuff. Your patience and the right entry and the right mindset and back testing everything, your patience is what allows this thing to happen over time. All right, team, closing right below that level, gapping up, closing right above it during our news candle, and interjecting with aftermarket low in real time and now bouncing off of that. Team, I am bringing support up, hybrid level of support here. 735.85. It's the bottom of this. This wick almost grabs it. This would have been establishing support here, and it breaks down below it. Now, this is very, very strong at the moment. Let's see what happens. There it is, touching overarching and rejecting it to the penny. And as you can see, I marked overarching on that red wick. So that's where that level's coming from, guys. It's not a magic number. That is literally the red wick and price in real time in the New York session. Moses, thanks so much for that. Super helpful. Glad, Moses, man. That's awesome. I appreciate that. And Moses, congrats on all your success too, man. I know you've been putting in a lot of work between options and yacht club, and your success is starting to show, man, and it's incredible, man. So super stoked for you, man. Congrats on that, man. It's a journey, man, but good work, bud. Harley, patience and discipline is huge in this. All right, team, 3 minutes and 20 seconds. I am not most likely going to take this candle. I do like this a lot. So what I am concerned about is we are now come out of the opening gate, huge sell-off, interacts with this little bit of a swing point, then disregards it, right? Now we have this back here, not worried about the all-time high at all. What I'm concerned about is this now not taking out the bottom of this. And then you have this next level here, and you have liquidity sitting all the way up to the previous day high touches that we all marked in real time. Does that mean it will not go for it? Nope. It absolutely could. However, This, to me, reading this in real time, looks like it's just wanting the liquidity off of this candle so far. But let's just wait and let it establish and tell us its story. Steve, so hybrid is essentially moving battle lines and adjusting the live action. Essentially, that's a great way of looking at it, Steve. So look for your broad range and then look for the tight range inside the broad range. And if there's enough draw to go from A to B, you take the trade. If there's not enough room to go from A to B, or if it soaks up all the draw from A to B, you stay away. And team, I went through my journal and I wrote down some stuff for you guys. My hybrid trades, I typically have an 84+% win rate for a half off and break even. Now, keep in mind, that's not the full 8 to 10%. That is somewhere between a 6% plus. And that's not that there's not enough room, it's the way that contracts move to get there, right? Then I have a 54% chance of a full trade. Now, get this is where it gets really interesting. Of that 54% for the full trade, 11% of the time of my full trades, stragglers hit at over 100%. Now, on the actual breakout of the broad range, I have a 72% win rate, which is a lot less than the 84. Now, this is where it gets really interesting. Then it becomes a 65% chance for a full trade after the full breakout. Now, this is where it gets also really interesting. I only have a 1% chance or less for stragglers to hit on a breakout trade. So, and that is over 219 trades. All right, team, 20 seconds. Not looking to take an entry here. I do like calls here. But I do not love this, especially the way it's coming down and reacting into those two zones right here. So we're going to let this candle settle and give us a really, really good setup. Okay, team, keep up with me here. Support is now in line with this in the pre-market to go below that firm candle below that, and I am into puts. Underline will now become the top of this green wick to draw us down. And resistance, we can clear that. However, what I do not love about resistance here, other than it reacts perfectly to this red wick, this green wick, the top of these bodies. What I do not love about this from 739.25, we have those PDH touches that we talked about yesterday. So we do have that to work through there. Probably I journal everything handwritten, and then I just do it old school 5th grade, write down how many wins, how many losses, how many half offs, add it all up. And if anyone did take this, it looks like you would have got filled around 141, 140, 140, maybe 142, depending on your fill. And it looks like those contracts snagged 155 and now rejecting that little resistance line that we have, confirming that. Once again, really, really good, powerful candle here. Really good push up. Now reacting off that previous day high wick, takes out that swing point, and then we have so much clean room all the way up to pre-market high. Nice, Marlon. Good work. I don't think Ryan is on, but happy birthday, buddy. He might be listening in the background. I think he's doing something with the kids this weekend. All right, team, 130 left. I have the 747 calls pulled up. We do need it to be above, strong and above these previous day high touches at 739.64. We will be very quick to execute with overarching in this looming region here in the top of these bodies in the pre-market at 740.77. So as long as we have enough room to get there, we'll go for it. June 15th, 747 calls. Twenty seconds, team. 16 seconds. It does need to be above these previous day high touches. Two, one. Buying here. Filled at 172. Come up to the top of those two bodies, team. Hopefully we can draw up to that and get risk-free on this. No stop yet. Expect it to come back down and retest the previous day high wick on a retracement and possibly the aftermarket high. But hopefully we just get this nice, beautiful flush in the beginning. Mm. All right, team, we get one more nice attempt up there. I'm going to try to get us risk-free. No stop is on as of right now. We have enough room to come up into here. There's a retest of the previous day high wick. Expect it to come back to aftermarket high and test that. Hopefully we can hold that line. And team, I'm going to go ahead and put a stop on at 137. Sorry, 139. Andy, good morning.
Good morning.
Still alive for the moment. See if we can't hold that swing point there and come back up. See if we can't close above that 739 or higher. Obviously, I'd love to close above the previous day high touches at 739.64 or just go green in the last 20 seconds. Let's see. All right, team, not a terrible close, but not a great close either. Mm. A little bit more of a pump here, and we should be back to break even. There we are at break even. Just a little bit below it. Come on. Now let's go take the red wick there. Go risk free here. Stop is off. Come on. Go get it, Spy. And going to go ahead and take half their team at 180. Filled at 186. Beautiful on that pump there. Stops at break even. We come above 187 to 190, team. I'll take my stop off and I'm going to look for 190 plus. Stop is off. Taking another quarter there, team, at 192. Stops at break even. Splitting stragglers, by the way. Taking stop to 175, team. Gonna lock in a little bit here. I'll break down the wide stop on this after this trade, okay? Still alive for the moment, team. Flirting right with that 174, 175, and stopped. All right, guys, girls.
Beauty, Jerry.
Thank you, sir. Thank you. I wanted this entry here, but I was really like, I watched it come up and reject the bottom of the swing point here, Andy, and then it didn't quite come to these two bodies, and I was like, that's really threading the needle to get back there with this giant candle. And then it launched there, and then it gave me an opportunity to get in here, and I was like, okay, it's going to come here. It takes out the previous day high wicks, previous day high lows, aftermarket high with giant draw up. I just had to use that wider stop to protect this lower swing point here, and it worked out beautifully for us. Marlon, makes your second win for the day. Time to go touch grass and have a good weekend, everyone. Marlon, enjoy yourself, buddy. And if y'all stayed at break even, you might still be alive in this. I don't know if Andy's still alive in this or not, but I would I would try to get trailers to this region here at 741.16. If this candle can come up and take that out, that would be the area to protect. And then you've got draw all the way up to pre-market high. You'll probably run into some turbulence in this region at 741.90, the bottom of that swing point. And after that, it's off to the races. Danny, unbelievable what patience can do. I don't disagree with you, man. His contracts move really nicely too. Justin, where can you find the video on the stragglers? It is pinned into the top of this chat, my man. Team, I'm going to switch some lines around in real time for us all. Overarching is now going to be the bottom of this swing point. Resistance, I'm going to read through some of this noise here. I'm going to mark the top of this going on here. And I'm pulling support to the top of that swing point and these prices in real time. Firm close below support at 739.26. We're in puts. We can write it to pre-market low. And above 740.35, we're going to ignore this little bit of noise right here, and we're going to try to ride it back up to the top of these wicks into overarching territory.
Well, let's get it.
Do it, huh? It's been a week, Andy. Holy shit, let's go.
Heck yeah, bro.
And we had a wild afternoon yesterday, and some really good trades on that price action that announcement candle gave us.
Yep.
Oh,
Yeah, that was crazy.
I don't know if you caught anything in the afternoon, but man, we had some really good trades. 729 puts are pulled up, team.
I thought SpaceX was going to start trading right at 10, but I keep checking. It hasn't started trading yet.
I thought so too. I haven't checked it though, but I was just under the impression it was. All right, team, 45 seconds. Another perfect test of that support line and back above it, respecting it very nicely, holding that level true. 729 puts are pulled up. Firm and below 739.26. Quick to execute at 738.50 or 10%, whatever comes first. 12 seconds. 5 seconds. 3, 2, 1. Buying here. Filled at 153. No stop yet. Ooh. All right, team, I'm going to go ahead and get my stop in at 125. That should hold the top of those candles. It's a wide stop. Should be trying to protect that 3/4 trade that you had. We just talked about it before the session started, guys. And it is really battling the aftermarket high, previous day low area, previous day high area.
Yeah.
Just get a little selling pressure. All right, not a bad print, but not a great print once again. Let's see if we can hold through this. Hmm. And stopped. Just got me. That's okay. That's as wide as I was willing to go where I was sized at. Um, Sean, they said they won't trade to it won't SpaceX won't trade till the afternoon. Okay. James Stragglers got stopped, but very green on the day. Yeah, mine got nuked out too there, but all part of it, man. But yeah, that trade had a real good probability to get us a little bit more money there. But as long as you size down, you should be very, very green still after the first one. Andy, today is 2 years as working with you as a coach.
Wow, amazing.
Yeah, and coincidentally, it's Ryan's birthday. How did,
Incredible.
how did we know that happened?
So 3 years since you started trading with Greystone as a
That's
student,
correct.
right?
That is, yep, 3 years. Yeah, I started with you in June of 23.
Incredible.
Mhm.
What a 3 year run.
Holy smokes, man. Talk about life changing. Steve, the green trade didn't come close to covering the stop out. I don't know how you're doing your math, Steve, but it should have. Let's say you were sized at 20% of your account, or in my case, I was sized at 400. The next trade, I sized it down to 80. It doesn't even come close to nuking that out, buddy. Allison, I'm just going to watch this for a second, then I'm going to answer that question for you, Allison. It's a great question. Oh, look at this now.
Yeah, just got ya.
Yeah, just got me. I thought I had a wide enough stop, like on the chart, with my Weeble is at. But looking at it, I probably should have had a wider. But what I was sized at, I wasn't willing to risk more than that with this setup. But
Right.
and I was anticipating the retracement back up into these bodies, but not way up into the wick like it did. But that's okay. 45 seconds, team. 729. Firm candle close below 739.30. Sizing very small again, team. Going to keep myself green on the session if possible. And obviously staying away. All right, Allison, can you speak to the psychology of doing well and then pushing your luck and then not doing so well? For example, you do well before the session, and then sometimes during the session, not so well. Then slow and steady wins the race. You find yourself hanging out and participating when you're already green. Some advice on when to call it and be satisfied and guess what I'm asking for. Allison, having a weekly target is my best thing I can tell you. There is nothing making you take any trade or every trade that presents itself. Win or loss, there should be zero emotions that, oh, I should have been in that, or damn, I shouldn't have been. If it meets your criteria, take the trade. If it doesn't, don't. But also be very mindful. Most importantly, be very mindful of what your weekly target is and do not have a daily target. That's going to get you in a lot of trouble. Have a weekly target and something very realistic of 2 to 3% until you're consistently profitable. And after you've been profitable for 3 to 4 months, then get a little bit more aggressive on your profitability, right? But until that, set that weekly goal of 2.5 to 3%, something very obtainable and realistic. And when you get to that goal, just walk away from it and watch price action and learn and possibly journal the trades of how you could become better at it. The discipline and the patience is the key to being successful at trading. And discipline is everywhere in life. And if you're struggling that on the charts, then focus on it in other parts of your life. Simple task, right? You tell yourself you're going to wake up and go to the gym and you set your alarm clock for 5:30 in the morning. If you hit the snooze button, good job. You just failed the first test of discipline of the day. If you set it for 5:30, you told yourself that night you're getting up at 5:30. Yeah, I know you're tired and you didn't sleep well and you tossed and turned. Get your ass out of bed and go to the gym, or go for your walk, or go have your coffee and read and study, or and reflect on what the day's got coming, or meditate. Whatever it is that you're going to do, do it. But hold yourself accountable for those things.
Five
And if
thirty,
you,
Jerry. What happened to 4:30? Are you slacking, man?
I'm slacking a little bit,
Come on,
Ryan.
man. 4:30. I thought it was 4:30. Let's go.
Slacking a little bit, huh?
What's up, guys?
Happy birthday, buddy.
Happy birthday, Ryan.
Hey, thanks, guys. Appreciate it. Wanted to say hi. Great trades, Jerry.
Thanks, man.
You
Yeah,
going
a
to a
little
nice
jumpy.
pancake breakfast or something with the family, Ryan?
He must be. It's not like Ryan to skip a day.
Downtown Minneapolis, and going to be there tonight as well. So, yes, it's been a good start so far.
Nice, man. All right, team 748s are pulled up. All right, team 748 calls are pulled up. Firm closing above our resistance line for calls here. Twenty seconds, team. Be ready. Five seconds. This is going to be close. 3, 2, 1. Staying away. Weak candle. Jory, yeah, this will be live traded, would be loaded up to the A to Z course like always, guys. Chris, thanks, my man. Steve, Jerry, can you discuss again what you discussed earlier? You joined around 9:55, so you missed the discussion with the recent stop that losses that 3x the previous win. Steve, discuss earlier when I joined around 9:55 this morning. So, Steve, I went over of like sizing of how to protect your day, how to protect the week. Um, I probably went on for about 8 to 10 minutes on that. So, if you'd like, just go back through the A to Z course and watch that a little bit later, my man. Ray, you're still sizing incorrectly. You can't get above 4 contracts. How long have you been trading for, buddy? Steve, trading 4 contracts, it's hard to size down and work the system. Okay, Steve, let's talk about that for one moment, buddy. You had a 3/4 trade with 4 contracts. You have a weekly goal of 2 to 2.5%. With 4 contracts, with a 3/4 trade, that probably would put you at about 1 to 1, maybe 3/4 to 1% on the day. Depending on how your week looks, that would have you at or close to weekly target. So consider trading 1 contract or not trading at all on that last one, bud. Or not re-engaging in the market until you get enough money in that account to do that, bud. And that's just a thought process. Andy Ryan might have a little bit more info on that, but if I was trading at 4 contracts only and I could not size down to protect it, I would probably just stay away from the trade after a 3/4 trade or a full trade.
Yeah, I mean, I think you can. I think you go down to 2 or 1, like you said. I don't really see a problem with that. Um, Instead of selling half, you just move your stop to break even when you sell half. So
Hmm.
yeah, maybe you're not grabbing profit, or you sell that one contract at the 10% profit and then you're out. I would
Hmm.
probably just move it to break even and then trail it. That's what I would do. But don't tell yourself that you can't do it. You can always size down. You can always protect profits, no matter what you're at. No, how many contracts you're sized at. You can always just not trade, and that's protecting your profits. So there's always a way to ensure that a green trade and a green morning doesn't turn red.
Yeah, I'm right there with you, Andy. If I was trading 4 contracts and I was sizing down to 1 contract, I would not be selling in full. Like when that thing, like let's say you got in at 150 and it hit 165, I'd probably be putting my stop at break even or like 153, 152, allow a little bit of stop loss there on some slippage, etc., and kind of protect that deal. And like you said, trail that whole thing or consider selling it like that half off to 3/4 positioning.
Right.
Well, look at this push down here, huh? Well, that thesis held true. Just needed way bigger stops than anticipated.
Right.
And then interacting with pre-market low off that wick, like really, really hard there, huh? 40 seconds. 728 puts are pulled up, team. 30 seconds to go. Gonna watch this closely here, team. Size yourself in a way that you can't go red if possible. 15 seconds. Three, two, one. Buying here. Filled at 156. And stop loss is going to go in at 134. Stop is coming off. Taking half their team at 168. Stops at break even. Stop is off. Taking a quarter team at 175. Stop to
Yes.
156. Come on, come get aftermarket low. Let's get into some $2 trailers here. Come on, get heavy, get real heavy. Stop to 160. Come on, come get lows of the day. Let's do it. Stopped at 160. Oh, it just
Beauty.
got. Yeah, nice. Kirsten, you wake up at 4:30, but didn't go to the gym this AM. Overdid it yesterday. Oh, 2 strength training sessions and a spin class. That sounds bad. Do you still in this, Andy?
No, I'm out.
In LG? Yeah.
Yeah. Yeah, I think but you have your I trailed mine to 162, so I was out there
Yeah, I had
a little
160
before
on
you.
it.
Yeah.
Yeah, just a little tiny bit. I think I felt like I had my trailers in the right spot. I think these contracts were just whipping really hard with the bigger candles that we're dealing with and just kind of tapped me on that.
Yeah.
AO, can I talk a little bit about buying and selling if the market at market or a limit? So I buy everything at a limit with an offset of 0.04. I believe Andy and Ryan are buying at market now, and then I sell everything at market for the exception of my trailers and stragglers. Those get stop losses on them. Yeah, Stephen, no problem at all. It's just a very long, like 10, 12, 10 minutes of me going on about that. So be a lot easier for you to just watch that. And then everyone else doesn't have to hear it twice. Scott, it seems like you get stopped out at 10% more often than not, and the trades go that way I want, but I'm not following the plan. So, all right. So, Scott, and everybody else listening, that we've had several people ask about the wider stops, 12%, 15%, et cetera, et cetera, et cetera, right? We have volatile environments where announcement candles happen. We have these bigger price action candles, 730, 799 on this big red candle, all the way up to the top of it at 740, 43. That's a massive move, guys. So Andy built this system with a target of selling your first half at 10%, going a risk-free trade, and then selling a quarter at like 12 to 15%. The first half is at 8 to 10, then it's 12 to 15, and then 17 plus for your trailers slash selling in full. Right. That also comes coherently with a 10% stop loss on all your trades. We have modified trading. Look at this candle, huh? What is happening here? Happy Trump tweet. No, it'd be bigger than that if it was happy Trump tweet.
I'm not seeing anything.
That thing would have left the chart if it was a really good try. um, so, anyways, about the 10% guys. So, what we have done when the system was originally built and for teaching purposes, that is a very brilliant strategy. And there is nothing wrong with keeping your stop there with those A plus high quality setups. Myself, Ryan, and Andy, with current market conditions, have widened our stop losses to protect the support levels if we're in calls or to protect a resistance level if we're in puts, keeping our thesis valid as long as possible for a retracement. The reason why we do not change our entry from a firm candle close into a retracement is because you do not know if it'll retrace. So the last thing you want to do is not be able to take the trade that meets all your criteria. And then you're like, oh, it's going to retrace. I'm going to buy it at a discount. Or then you start adding contracts to it, trying to bottom loss that. That is a strategy that probably works for something else. That does not work for the way we trade, team. So keep your entries consistent, keep your execution consistent. You're looking for 8 to 10% or 12% on that first half of your positions. If the chart is not allowing that to happen or contracts are moving very poorly, consider selling early or just moving stop to break even to protect your trade. These rules are like, they're not hard set in stone from like your 10% stop to your 10% exit. Like you have to be dynamic and fluid to what the chart is doing at the moment. In the beginning, when you're learning it, keep it there. Look at this candle. Wow.
Yeah,
Holy smokes.
looks like the Iranian foreign minister is being more agreeable and saying they're in line with what's being presented to them. It's in line with their responsible and transparent approach. All details will be shared with the public in due course.
Love that. That's good news. Steve reached down to grab liquidity. Happy candle comes in, takes it all out. I mean, at the end of the day, guys, we had broke into bearish structure here completely, in my opinion, with this red candle. It takes out the pre-market low. It breaks out the swing point. Real-time price, we have lots of liquidity on this green candle and all the way into lows of the day. I thought that was a fantastic A plus setup. That trade, a lot of people don't like big candles. I'm taking that every time. This big green candle, I stayed away from it. I'm very green on the session right now, and it's Friday. We've had one hell of a week. Lots of really good trades. Lots of very lots of stop outs. Some of them wider than normal. I'm well above profit target. Would I like another trade? Yes. Would we have got profit on this one? Yep. We'd have been probably stopped at break even with this candle the way it's playing. And I'm completely fine with letting this settle for a little bit and not taking another trade at all. So, James, the 2 minute and the 5 minute candles are very bearish, but the 1 hour is extremely bullish. You wonder if these strong pushes to the downside actually backed by institutional volume. James, that's a great question. This candle like this, that's not retail trader, so I would imagine that's institutional. But you would know way better than me about institutional pressure versus I do. I just read the candles and what the chart gives me, man. I try to keep my mind as clear as possible of what's doing it. James, and I appreciate that, man. That was a good read on price. Scott, you thought we were supposed to set stops at 10% right when we enter the trade. So, Scott, a lot of people will use that on their turbo traders, the automatic stops. I don't have stops on mine. I just calculate that where it needs to go on the chart. Um, so we have been using a little bit wider stops over the last, what do you think, Andy? Wider stops probably over the last 60 days or so. Those market conditions, we've had them in last April with liberation and all that stuff going on. We've had them as wide as 18 and 20%. And all I'm doing is sizing down accordingly, team. So, and what I mean by I'm sizing down accordingly, if you're sizing at 30% of your account with a 10% stop, right? If you need to use a 15% stop, bring that down to cover that other 5%. So bring that down to, call it 22%, 25%, right? If you're going to go to 20% down and you need to use a 20% stop and you were going to be sized at 20 or 30% of your account, just put the math in your favor. So what you're trying to do is the stop out is going to cost you the same risk to your portfolio every time. So example, you're going to be in this trade with 100 contracts with a 10% stop and you need to use a 15, then you go down to 75 contracts or 80 contracts, right? If you need a 20% stop out and your max size of your full trade would be 100 contracts, bring it down to 50. So that way, when you get stopped out, the same amount of money is missing out of your portfolio, guys. It's simple math. Don't overthink it. Chris, what a deal, bro. $6,000 on that candle. Holy crap, bro. Yeah, it's limit. I buy at a limit offset of 0.04. Not 0.4, 0.04, my man. I don't know if this is a liquidity sweep or not. This thing looks super, super, super strong. I love the way this candle closes. And
Same, yeah.
this candle closes here. It comes down. It respects the top of this swing point and all these wicks that we talked about. Coincidentally, or not a coincidence, the all-time high of 511. Super bullish and still room up to the top here
Yep,
at
that's like the most
743 or
beautiful
4.
thing on a breakout, that clean retest of the previous resistance.
Mm-hmm.
Textbook.
Absolutely. Team, I don't know if I'm right about this or not. My My assumption is these are not liquidity sweeps. These are news candles, and it's responding according to news. Like these candles are real similar to like what a CPI candle or a PPI candle or an FOMC candle could be, something like that. I don't believe that these are liquidity sweeps from any way. This is institutional buying at my in my mind. Maybe Andy's got some different thought process on that. I mean, it's respecting levels in a beautiful way, so that's why I don't think it's sweeping that.
Yeah, yeah, no, I agree. I mean, I think especially, I mean, that one big candle was totally news driven by what
Hmm.
came out about the Iranian foreign minister. But I so strongly stand by the idea that anytime, even on FOMC, where it's like could not be more news driven price action, as you just said, key levels are always respected. And that example you just cited, that the 1050 candle close was well above 740.80, which was the level of resistance that is held all morning long. And what did we do
Hmm.
as soon as we closed? We came right back perfectly for a retest and then continued that move to the upside with gorgeous follow through now in the last couple 5 minute candles. So yeah, I mean, totally news driven, but it's led to beautiful reactions to key levels. It's now reaching for pre-market high and seems like it's running out of steam for the moment. So we'll see how it continues to develop. But um, I think always it's just about speed and an increase in volatility, but it's never about key levels not being respected or technical analysis not being a thing, if that makes sense.
Scott, you size to make sure that you only lose no more than 1% of your account, but you're setting your stop that has continuously stopped me out much more than making anything. So Scott, if 4% or I'm sorry, four contracts on your account, Scott, this is just something to consider, my man. If you're taking four contracts, but you have to set your stop so small that you can't allow price action to retest prior levels before the continuation or the distribution that we're looking for, consider only taking one or two contracts and just learning that price action until you can get a little bit more money in there, Scott. Just a thought process, man. Um, because I hear what you're saying, and it can be very discouraging to take super high quality setups that are following through, and then you're getting stopped out because you're having to use that smaller stop. So just something to consider, man. I'm not telling you what to do by any means on that. Just something that might make it a little bit more helpful for you in the big picture. Chris, been watching the Yacht Club videos, man. Some of the best, most profitable traders are the combination of Yacht Club and options traders combined. They find those lower entries, they take them to those higher points. They're trading zero DTEs and getting those real big, fast, explosive moves, man. It's a really, really beautiful thing to see how many people are profitable by dynamically blending all the systems.
Yeah, dude, it's awesome. I think it's so much of what we talk about, like no one can be a carbon copy of anyone else. We all sort of take what we learn and customize it to who we are. And man, it's awesome to see so many people. I mean, that's what we set out to do.
Hmm.
That's what we set out to do here. Give you all the resources that we possibly can to help you become your own profitable trader. And yeah, I mean, listen, every single one of the massively successful uh, members of this community, they don't just jump on here and copy trades. They don't just say, well, I need to be a carbon copy of Jerry or Ryan or Andy or Thomas or Lewis. They say, how can I leverage all of this information and all of the amazing minds that I have here of a combined decades at this point of profitability and blend it all together in such a way that fits me, fits who I am, fits how I'm reading price and make it my own. And that's how you excel. Excel beyond you know, honestly what you ever could have imagined for yourself. And we're seeing $30,000 days, $80,000 days from people that started trading in the last 2 years. Like, come on.
It's absolutely
Unbelievable.
it's unreal.
Unbelievable.
It's unreal when people are making more daily than what a high six-figure job makes yearly.
Yeah.
Um, James, Andy, and Jerry, can we stay on this call and keep talking till 3 p.m.? I don't want to be on that long, James, but I'm glad that you want to hear us. Joe, you were in a killer yacht club type trade with a put, and then the stupid news candle came and crushed you. Joe, that's what stop losses are for, bro. You can't predict the news. You can't predict it. This is a game, like I said this earlier before Andy hopped on. The game that we're playing, trading, day trading, and scalping this way, and the way Yacht Club trades is probably more of an intraday trade. Like you'll be in positions for a couple of hours at a time. That's fine. No matter what, this is a game of probability, not certainty. Our job as day traders is to find high quality A to A plus setups with enough room to go risk free. If you can be right over 68% of the time, you will be extremely profitable in the long run. And the more that you trade with a 60+% win rate, the higher your portfolio becomes because you start seeing different levels, seeing better entries, protecting different areas, and it just starts working bigger over time. And then that's how you scale it, man. But there's nothing wrong with being in a trade and a news candle coming out and wiping you out. So what? Did the trade meet all your criteria? The answer is yes. Then you did the right thing. Scott, thanks, Jerry. You just don't want to see that 1% loss turn into two or more because you didn't stop at a 10% loss. You started with a 40K account and you're down to just over 36. You usually trade 20 contracts because of the $30, $7 premium range. It ends up being 1% loss if stopped at 10. And I think I'm doing that right, but maybe I'm wrong. No, Scott, I mean, if that's what's fitting your risk appetite, that's fine. So, Scott, a handful of things you could do with an account of that size is stay sized at your 10%. Um, or maybe bring it down to 8% of your account. So maybe you're not trading that full 8%. And then look for those higher positions on those trailers and those wider stops to keep you in there. So if you're wanting to risk that, right, with an account of 36K, so 10% of that would be $3,600 into one trade, right? So maybe bring that down into $3,000 on the trade, or bring that down into 2,800 bucks of the trade, and then widen that stop up to 12 to 15% to survive these evil retracements that we get. And then that way you're still only losing 1%. You don't have to be at the huge sizing of 20 contracts or 30 contracts, buddy. If that's your risk appetite to not lose that much, then back off of how many contracts you're in. And then with your trailers and with the straggling positions, you can make 4 grand in a day with 2 stragglers, buddy. Ask me how I know. Done it 3 times this week. And that's relatively new. And that doesn't mean you're going to get them all the time, but when it happens, it's magical. Hmm. Team, I'm going to mock trade calls here. I'm not taking another trade. I'm green on the day, green on the week, and I'm just going to exercise that. But I do want to watch this. So I have the 749s pulled up with a firm close
I'm
above
gonna drop here,
742.
guys. I didn't even realize the time. I'm gonna
All right,
drop
on.
here, guys. Have an amazing rest of your Friday. Jerry, incredible session, brother. Way to wrap up the week. See you guys
Thank
on
you, man.
Monday. Have a great one.
Andy, have a great one. All right, team. Non-firm close, so that doesn't count. And you've gone totally hybrid in options using both options and Yacht Club thesis. You were profitable before, and now you're 2 to 3x profit margin. Incredible, Tim. That's so badass, dude. All right, ladies and gents, I'm going to wrap up the session for now. Hope you guys have a great weekend. Thank you guys for everything. And when this one gets loaded in there, those of you who missed the beginning of it, just watch the first 10 minutes of it or so. There's a lot of good information in there of sizing, protecting profits, setting levels, all that crap. So, oh, hang on. Let me just circle through questions. AO, how do you choose which contracts to pull through? On 1DTEs, man, you're looking for approximately 130-ish to 180-ish. That's the sweet spot. And James already answered that for me. So thank you, James. Okay, so Scott, perfect sense. Thank you. Haven't figured out what I mean by stragglers versus trailers and how to manage those. Okay, so Scott, let's just call it let's just say that you're in it with 22 contracts, right? Or, I'm sorry, 20 contracts, easy math. The traditional gray zone system would have you sell 10, sell 5, sell 5, right? So now trailers have become you sell 10 your first half, then you sell 5, then you have 5 left, right? So you would be trailing 5 to the maximum highest possibility on your trading. Then I have split out my trailers into stragglers. So I will trail, say that you have those 5 left. I would trail 3 of them to the maximum position and I'd leave 2 at break even. And I would literally just leave those there until the afternoon session rolls around, unless you look at it at 1 o'clock and they're at $7 or $8 magically. Then something like that, and let them roll. But that's all there is. I made a video of how I break them apart. How you manage the stragglers is entirely up to you. Typically, it's a lot of low hanging fruit, and you get these huge, big distributions when SPY makes these moves in the trending markets. Like today, it's very range bound. Like we took out pre market low and after market low, and we came right back into the range. We're stuck, in my opinion, between pre-market high and pre-market low. And it when it makes a decision to go above that and stay above that, or below that and stay below that, then we'll have that direction that it's going to go for the day. But as of now, there's no clear direction of what it's going to do. And we had this huge announcement candle, news candle, whatever we're calling it, at 1050, and it comes up and it fails to take out the pre-market high. And everything about this in my mind, it should be going after that pre-market high. And I thought it would have already made it there with that, with these two powerhouses, but it hasn't. Yes, when I say Tipton, when I say 2 stragglers, I mean 2 contracts. Absolutely. And it's up to your risk tolerance too, guys. And you can kind of play that by where you're at on the week. God, have a great weekend as well, buddy. Rafi, you're awesome as well too, buddy. See you guys Monday. Charlie, is this trailer straggler video on the YouTube channel or A to Z? I don't know if it is in there, and it is in the YouTube. Scott, you're welcome, my man. All right, team, you guys have a great day. I'm out for now. Have a fantastic weekend, and I will see you all Monday morning. Enjoy yourselves.